So glad to have everyone here with us today to talk about crop insurance, which is always so fun, but also very important. And so I'm very glad that you've all joined us for today's webinar. So, Weatherproof, your operation with smart risk management is our title, and we can go ahead and jump right in. My name's Kelsey Williardson. I know I've spoken or met several of you in the past. I'm a policy associate for the Center for Rural Affairs, and today am partnering with the Organic Farmers Association for this lovely webinar we're going to present to all of you. We're going to do our presentation, a quick poll, then we'll have time for Q&A, and then some announcements from the Organic Farmers Association on some exciting things they're doing and launching, and it's going to be a great session. So I hope everyone can stick around till the end. So as I said, my name's Kelsey. I'm with the Center for Rural Affairs. If you're not familiar, we work basically to advocate for rural communities, and that very much includes farmers. They're one of our kind of cornerstone groups, and reasons why our nonprofit was created. And we do our best to engage people in decisions that affect the quality of their lives, and especially in rural areas. Our staff are spread out between Iowa, Nebraska, South Dakota, and Minnesota. I am here in Iowa today, and I'm the little star farthest to the bottom, and live here in central Iowa. So I'm happy to get to talk with all of you today, whether or not you're joining in at 1 p.m. or 2 p.m., whatever it may be. Appreciate you all joining. So we'll go ahead and kick her off with managing risk. So obviously, as farmers, you know that unpredictable severe weather is never fun. So just to kind of get a clearer idea of what that means, there are obviously financial implications for farmers when it comes to those unpredictable weather events. So, with data that we have from 2023 across the states that the center works in, losses from drought and wildfire and heat in just that year alone was over 997 million in Iowa. It was 2 billion and 614 million in Kansas. Minnesota was over 1 billion, Nebraska as well, and South Dakota was 632 million in losses just in that year alone. So the combination of drought, which was very common, as well as wildfires, certainly terrible. And then on the opposite end of that spectrum is excess moisture or flooding. And so those losses, while not quite as significant, certainly can cause a lot of damage and can cause a lot of damage in local areas. So when you're in that flash flood zone, even if there's maybe fewer dollars lost, those that are impacted are going to be impacted worse. So important to know. And then we also know that losses from hailstorms were very significant in 2023. Iowa was a little bit luckier in that. Kansas was not, with over 360 million in losses there. So these are all things that obviously there's not anything you can do to prevent it. And even if you're doing all of the right things, you have a diverse operation, you're using good management, these are things that sometimes you just can't combat with those practices, which is why we want to talk about other forms of risk management. Along those lines, disease also accounted for almost 3% of crop losses of corn for 2023, and worldwide pests can damage up to 20 to 40% of crops or account for 20 to 40% of crop damage. And that just in 2023, 830 million bushels of corn were lost due to pest pressure. And then in total, there was over 1.5 million acres of cropland lost to wildfires. And so, while here in Iowa, we might be fortunate against that, in Canada and then even into Minnesota this year, wildfires have presented quite a problem. So, you never really know when that's going to impact you. So, these are things that we know, even if you are doing your very best, sometimes you need some other type of safety net to offer protection because these are things that you just are completely out of one's control. So that's when we want to think about crop insurance as an option. So when those things that you have no control over and you just have to sit and watch what happens, this can at least give you reassurance that you're going to be financially secure and protected into that next crop year. So we're going to do just kind of a quick overview of what those policy options include. So we're going to kick it off with individual crop protection. So this is what most people will think of as like maybe standard or conventional crop insurance, the one that people will typically think of first when thinking of crop insurance. Um, and so it is insurance on that by crop. So that will fall under either yield protection or revenue protection. And they are multi-peril crop insurance, which will cover losses due to drought, excess moisture, disease, and pest infestations, like we talked about. These are dependent based on crop type and location. So if you're doing things like a row crop production of corn or soybeans, and you're in the Midwest, this is going to be relatively easy coverage to get. However, if you're doing specialty crops, or you're just doing ones that maybe your neighbors aren't doing, say you're, producing rye or wheat, but no one else in your county is, this may be more difficult because those neighbors are going to help influence your coverage because this coverage is going to be based on your expected yield. So you can insure that yield, or if you're doing revenue protection, it will be ensuring that yield times the cost of what your expected market price is. And that market price is influenced based on your location. So these are very dependent for where you are located and what type of crop you're producing. So that is one thing to keep in mind, that this is kind of very standard coverage. And if you're doing a large row crop operation, could be the best option for you. However, if you're doing diversified, we're going to talk about maybe some better options there. Though it is important to know that specialty crops can be covered with that individual coverage of yield or revenue protection, and it just needs to be on this list. But remember, it is also still location dependent. So even if it says that chili peppers are covered, if you don't have anyone nearby in your location, you may not be able to get that coverage. So please keep that in mind. I apologize. My throat has been very scratchy today. I hope I'm not too difficult to understand. Um, so essentially, this also, makes sense in a way that in Iowa or Ohio, you're not going to be able to insure bananas because no one's going to be growing bananas there. It's not going to be super feasible. Um, And so there is, reason for this, but also can have, kind of an other effect of things that you could grow in your area, but if others aren't, it may just be more difficult to get that coverage. And that's something that you'll have to discuss with a crop insurance agent to make sure that whatever you're growing is available in your area. And we'll talk about options if they aren't. So if you're have a diversified farm, so you're growing multiple crops, if you have crops plus livestock, or you're doing any type of animal products, this is a really wonderful option. It will cover all of your items under a single policy. And it is the first program to be available in all states and counties. So that location dependency does not apply here because instead of that insurance being based off of your yield history plus market price, this is based entirely on your revenue history. So however much you made in those previous years is going to create and establish your policy for whole farm. So that enables it to cover everything you're producing. And there are also incentives for diversified operations. So after you can use whole farm to insure one item if you would like. That's perfectly acceptable. But if you insure two, you're going to get a greater discount on your premium. If you insure three, that's an additional discount, and four, an additional discount, all the way up until 10 items. So the more diverse the operation, the greater your premium discount. So there is an incentive there for those diversified operations. to enjoy. And that's definitely a great boost to make sure that um, we're rewarding those things, because when it comes to insurance, I think everyone realizes a good part of risk management is not having all of your eggs in one basket, so to speak. So knowing that even if you are afflicted by, some sort of catastrophe, if you have some sort of flooding, but you also have livestock, you're not going to need to make a claim for your entire operation. If you have, a pest infestation that only affects one type of plant, and your other plants and your other crops are all doing fine, and those multiple crops help reduce that pest pressure, that's again, less of a payout. So RMA likes to incentivize those good practices and diversification. So that is why you'll get really great discounts for those practices. Um, and essentially, whole farm will cover any crop and commodity except for timber and forest products. And so that would be also like your forage products, because obviously that's going to be less, you'll be less able to say with consistency what those products will be from year to year if they're forage. So those won't be able to be insured upon. And then any animals that are for show, sport, or pets. So obviously ones that you would not consider livestock are not going to be under your crop insurance. And I think that certainly makes sense. And then even better, we have micro farm for small operations. So we know that small operators have a very large burden for management, because not only are they the farmer, they're the marketer, they're the accountant. You're your own salesperson. You don't get sick days like other people do during your work seasons. So to reduce that burden, micro farm is kind of like the easy version of whole farm. It's a little bit easier for reporting, and it is for operations that are making 650,000 in annual revenue or under. And then in subsequent years, that cap is higher, so it allows for growth, and then that cap goes to 400,000 in of annual revenue. And so the one of the biggest differences between whole farm and micro farm is that to have a whole farm policy, as I said, it is based on your revenue history. For whole farm, you need 5 years of revenue history. For micro farm, you only need 3. So this is really great. And as far as, if your last 3 years were your best years, you're going to get a really great insurance policy from it, because it's going to take your average of your revenue to create your policy. And the caveat to that, if you are interested in whole farm, you make over that 350,000 cap. If you are a beginning farmer, which is defined by RMA as having farmed for 10 years or fewer, you can also just use 3 years of revenue history for whole farm. But for micro farm, that is the standard, regardless of how long you've been farming. And one of maybe the best incentives, especially given this is for smaller farms, is that revenue from post-production operations and value-added commodities can be included in this insurance. So in a nice, easier way to say that, if you are, say you're growing blueberries or apples, some sort of fruit, and then you take that and you process it into jam, or you make pies, or you create applesauce or some other value-added product that you're then going to sell for a higher amount, you're able to insure for that revenue. So then if you have a loss for your blueberries or your apples, you're able to get that insurance for how much you lost from not being able to make that jam or that applesauce or pies or whatever you process that into. And so that, is really a significant benefit to this, because other policies don't include that. Whereas if under a standard whole farm policy or a standard insurance policy, you're only going to get the payout for the gross value of those products, not what you are necessarily selling them for if you're also processing. And so then the other kind of final option that we're going to discuss today are written agreements. So written agreements tend to be a bit arduous in nature in that it does require more reporting and more paperwork, but they're maybe not so fun for the producer, but they are also very important for the USDA's risk management agency because this allows RMA to see where coverage is lacking because this is kind of the stopgap filler for when no other insurance plan really fits what you need. That is when you use a written agreement. And so RMA is able to look over all of those written agreements and then see, where is coverage lacking? What do we not have things that cover? And that will incentivize change. So that is also how, specialty items get added to that individual coverage list. Um, and so this is also, valuable to communicate to RMA, but it can be difficult. So expect, a little more paperwork. You still need 3 years of history for whatever crop you're going to be doing a written agreement on, um, or a similar crop. So you could go from blueberries to say honeyberries without needing 3 years of history for honeyberries if you have 3 years of history for blueberries. I'm not sure if that's the best example since they're a perennial crop, but that's what we're going to go with as far as similar items. Um, you will need a letter of adaptability from an ag expert. That can also come from, organizations. So you have like, Corn Growers Association, Soybean Association. If you have another association that can write you a letter of adaptability that says this is an acceptable place to grow this crop, that can also count, or you can get a letter from an agronomist. Um, but you will also need to have documentation about the land and what you plan to grow, and you will just need a lot of information up front in order to create the written agreement policy because it's essentially being designed for you. So just be prepared for that. It is a little bit more difficult, but you will at least have coverage in that financial safety net. So I think having that safety net, especially as, we get into this area where weather is, maybe less easy to predict, it is still worth that effort to make sure you have that protection for your crops. So those are kind of the basics we're going to go with today. And now we're going to talk about how those things cover these causes of loss that we kind of talked about to begin with. So when we think of that, we think of like excess moisture. So that can be, consistent, frequent rainfall that then causes damage to your crops over time, or it can be flash flooding where all of that rain is happening at once and it can wipe out, entire fields or flood in a single event. So both of those are causes of loss that will be covered under multi-peril crop insurance, so yield and revenue protection, if this would then cause your revenue to drop, and then that whole farm and micro farm. And then on that opposite end of the spectrum, we have lack of moisture or drought, which I know a lot of us in the Midwest have become very familiar with in recent years. And this year, at least in Iowa, has been kind of the opposite, which, that's how it goes. The continued lack of precipitation can obviously limit or destroy yields throughout the season. So claims for this can be a little bit different because it's not typically as an acute of an event. It is an over a longer period of time, prolonged damage to a crop or reduction in quality of crop, which will then help you, which will then require a claim. And we're going to talk about how you're going to do that claim here shortly. And so those ones are pretty basic, pretty self-explanatory. When it comes to disease, it can be a little different. So crop diseases are obviously caused by bacteria, viruses, and fungi, and can, create substantial losses. But in order to receive coverage for those losses, you first must follow good farming practices, which are outlined by the Risk Management Agency. And that involves staying up to date with disease risks in your area and taking reasonable actions to protect and prevent the spread of disease. So, if disease starts on your farm or starts on a neighboring farm, you are expected to take action to protect that, whether that's, spraying a treatment or taking, a physical measure of removing diseased plants. You do need to be able to document that you took those actions, because if you have a loss from disease and you say, oh, it was disease and I didn't do anything, you're not going to be able to make that claim. So it's important to not only do those good farming practices that are outlined, but to also document them as you go, because that's going to help make the claims process easier. And it is just one of those requirements you have to follow with insurance. um, and then we also have wind damage, which can, rip tender stems, leaves, and buds, erode soil and nutrients, uproot plants. These can also be a little more difficult to measure, just because you could have, maybe milder damage if you have wind early in the season and it's taking buds off of plants. That's obviously going to decrease your yield. If it's severe, like the derecho we had, 5 years ago, that's almost a little easier because you can say, oh, it's all gone. So that's an easier claim to make when it's that more, I don't know if I want to say subtle, but gradual loss of yield where you can still keep tending that plant, but you're just not going to get as good of a yield at the end. It's still important to document when those things happened and when you're noticing damage. And so, similar to disease, pest infestations also require the following of good farming practice guidelines set by USDA's Risk Management Agency. So that can include both insects and encroaching animals. So regardless, so this can mean putting up, a type of fencing. It can include putting up pest traps, or it can include spraying. Um, And again, this is something that you're expected to keep up to date on, to know if pest infestations are happening in your area, to keep a lookout on your farm if you're noticing encroaching animals, that you're taking actions that follow these guidelines and documenting them whenever you're able, to make it easier for when you then want to make a claim at the end. And then frost, obviously, periods of low temperature can jeopardize young plants. These can happen later than standard and then, kill off things very early in the season. But it is important to know that you're only going to be able to make a claim if you're following the planting timeline set by USDA. uh, so frost, you are still required to plant within those planting dates. So USDA will set for each crop that you can start planting at its early planting date. Everything needs to be in the ground by the final planting date. If you plant prior to the early planting date and frost takes out your, seedlings or your crops, you will not be able to make a claim, because they're saying you planted too early and it was going to be too cold. So that is important to know, and will be a part of your policy whenever you make it, to know what those dates are and that you're keeping within those. Because if you do have a frost and it's past that planting date, you'll be able to make a claim, no problem. And so then hail, which I think is everyone's worst nightmare when it comes to plants, and homeowners as well, that hail can very quickly defoliate plants, reduce crop stands, damage budding or even mature fruits and vegetables in minutes. It can take out an entire field very quickly. Um, and even surviving crops can then have decreased yields and create further financial losses throughout the year. It is important to know that hail protection varies by policy. So all of the other items that we've talked about are things that can be included in yield protection, in revenue protection, in whole farm. But you want to specifically ask about hail protection. It may need to be something that's written in addition to your kind of pre-made, preset policy that you're creating. Make sure you know what your hail coverage is and if it is something you need to add on to your policy, because it is frequently a separate item. So Make sure you know when you're talking to your crop insurance agent, ask about your hail coverage. And the same can be said about fire coverage. So, to be covered under risk management agencies' policies, losses from fire have to meet specific requirements. So, that means it needs to be traced back to either to a natural cause. So, that can include things like a lightning strike, or other, you know, natural instances of where a fire can start. And the spreading of that fire needs to be caused by that. So that argument also goes in to, if drought was a factor to creating spread and things of that nature. It is important to know that if a fire starts due to negligence or intention, it will not be covered under crop insurance. So, if you have some sort of electrical equipment on your farm that wasn't maintained, it sparked, and even if there was a drought and it caused a fire, that will not be covered. And the same is true if your neighbor was negligent, had the exact same thing happen, had equipment that sparked a fire and it spread to your farm. It will not be covered under crop insurance. The same can be true if someone starts a fire on your farm or starts a fire on your neighbor's farm and it spreads. Those are not covered causes of loss. Those then become civil suits. So they will not take responsibility for things that are not natural causes. So if it is a negligent cause, an intentional cause, then that is unfortunately will lead you to a court of law to situate those financial losses. And it's also an incentive to not be negligent about your equipment and making sure that you have fire suppression equipment around your farm as needed. But that is important to familiarize yourself with what fire coverage is available and its limitations. Um, and I would also recommend double checking. So while it hasn't been, we haven't heard much from people in the Midwest with this problem, but there were many farmers in California that due to previous wildfires, it was considered like unsustainable for that to continue to be covered. And so some policies lost their fire coverage without farmers realizing it. And then wildfires came in again after, the fire coverage was removed a year, 2 years ago. And then they experienced fires this year, expecting it to be covered to find out that it no longer was. So this is something I encourage people to always make sure you're informed on your policy, know what the limitations are, know what your coverage is, because it is something that can be altered. And then finally, loss due to drop in local market price. This applies to revenue protection policies. So that is revenue protection or whole farm, because whole farm is whole farm revenue protection. So if you're, you know, at the end, even if you had great yields, even if you had substantial yields above your normal, if, market price drops and you end up under your usual revenue that you've been insured for, then you're able to make a claim. And so keep in mind that if you're doing a yield protection specifically type policy, this will not apply to you and you won't necessarily get a payout. But if you have revenue protection, this is how that works. And so you'll want to just know what your policy is. Now we're going to talk a little bit about how you make a claim. So we've talked about what constitutes making a claim, but how can you do it? So you want to call within 72 hours of notice damage. So that's whether that's an acute event or a non-acute event. So if there's, a flash flood, you want to call right away. If there's frost, call right away. If there's hail damage, call right away within 72 hours. Now, if you're experiencing, say, drought, and you're noticing, your plants are not thriving, you're seeing, there's stunted growth, things are getting dry, or, crackly, as Julia mentioned before we started our call, crunchy, then still make that call. There'll probably be less urgency for an inspector to come and look at the crop, but you want to notify your agent as soon as you notice that there is damage and that you are expecting lower yields. So that's easy to judge when a big event happens, but even if you're noticing that damage over time, you still want to make that call. And that is, is the same for disease or pest infestations. Once you notice it, make the call. Whether or not you necessarily have an inspector come immediately is going to depend on a few other factors. You'll also be able to make a claim during harvest if you then notice low quality or damaged crops. This is less than ideal if you haven't, already documented that. You want to be documenting it as the season goes on. And so you made that call earlier in the year, said, hey, drought is impacting. You're going to call again after harvest once you see, the full impacts of that loss. You can make those calls up to 15 days after harvest, because obviously that's a busy time, but it needs to be within that 15 days and before the end of the insurance period. So if you're harvesting right up to the end of your insurance period, that 15 days isn't going to count. Your stopping point is the end of the insurance period or 15 days prior, assuming that's when you were harvesting. So keep that in mind that the end of the insurance period is the end of being able to make a claim. So know those dates when you talk to your crop insurance agent. And if you want, the center also has a fact sheet that has a nice little paper for you to fill out so you know all of the important dates for your policy. And so what happens when you have, say that late frost or, flash flooding early in the season and you lose all of your crops very early and so early that you could probably plant again? Do you make a claim for like losing for the whole season? When you know you can plant again, you don't have to because there's a thing called replant coverage. Replant coverage can be really great, but the timing is very essential. So when I said, timing is going to depend on the situation when you call, you want to call within 72 hours of noticing. If you have a late frost or a flash flood event and it's early enough to plant again, you want to call immediately and you want to get someone out there as quick as possible so that way you can get something else in the ground. And then you can still harvest and you will be able to make a claim, but that claim is going to cover that cost of replanting. So this isn't going to come as an expense to you, but it will be able to be, you'll still be able to grow something and have a crop, which is what you want. Um, and you'll have that replacement covered. So the caveat to that is you still need to follow those same guidelines that I mentioned, that you have your early planting date and your final planting date. You still have to get everything in by that final planting date. And if you push past it, you can, but you're going to lose percentages of coverage each day past that up till 10 days. So know what your time limits are, but this can be a really great option for those like early season catastrophes. Um, and it must be inspected before replanting begins. So even if you're like, oh, it's all wiped out, I need to get something in now, don't do it. Resist until someone comes and looks at it. You want your inspection done because otherwise they will not be able to cover that cost because they won't have it documented. So if you know it needs to get in right away, convey that sense of urgency to your crop insurance agent and try to get an inspector out there as quick as possible. And so when that inspector comes, whether that's for, actually, I'm going to talk really quick about replant coverage, also has an additional option. So let's say things happened, it was still early in the season, but it's not early enough for you to plant another crop. Or maybe it is, but it's just not going to be super feasible because you're going to cut it really close, or you don't know if you can get new seeds in time. Whatever the reason may be, there is an alternate option where you can plant cover crops to replace your crops. So you can still use that replacement crop payout. Essentially, you can make a claim for losing that crop, and then instead of leaving the field fallow, you can plant cover crops into it. And that is obviously going to be good for your soil health. It's going to reduce erosion throughout the rest of the season, give you some plant cover. But you can also, whether you want to consider it kind of working the system or not, if you have livestock, they are allowed to graze it. And if you have neighbors with livestock or other people in the area that want to graze it and want to pay you so they can have their livestock come graze it, you're allowed to do that. So cover crops, the only like caveat is that it's needs to be a non-harvestable crop. So you're not growing it to harvest, but you can get paid to have um, people come and graze it. And so that can be also a little financial incentive for you to throw that in there. But again, make sure you do the inspection first. That is most important, otherwise you will not be able to make a claim. So get your inspection in there. And so when you are going to have an inspection, or you see that damage, you're going to immediately contact your crop insurance agent. A loss adjuster is going to be sent to inspect the damage. So at that point, when they get there, you should have an idea of what your plan is going to be. So whether that's replanting, if you're going to replace with a cover crop, or if you're going to make a claim for that entire loss, and those can obviously be kind of shifted around. You can replace with a cover crop and make that claim for the full loss. Um, you should have an idea of what your plan is when they get there. And you're going to have to continue to care for the crop using good farming practices until the inspection is complete. I know this seems silly, but it's so that way you can demonstrate that all of the loss that occurred was because of that event, not because of poor caretaking. And when it's an early season thing, typically you're going to be able to get someone out there pretty quickly. So hopefully there's not going to be a lot that you're going to have to do. But if you have something that you know is going to be a loss at the end of the season, but someone can't come out to see it right away, you do need to still be doing all those things that you would do normally to take care of the plant to show that you were doing what you were supposed to do and there was still loss. So keep that in mind. Those good farming practices are important to follow for the claims process. But once the inspection's done, you don't have to keep doing that. Once they can go and verify, then you're done. And so to prepare for that inspection, you're definitely encouraged to be present because no one is a greater expert on your crops, your fields, and your farm than you are. So you want to be there to answer those questions um, because you're going to get asked lots of questions about the damage that happened, when you planted, how you've been caring for it, what you've sprayed, how you've tilled, all those things. You'll want to make sure that you're ready to answer those questions. And you should also have your necessary paperwork prepared. So that includes your USDA Farm Service Agency documents that illustrate, where you have your crops and your acreage. And so the adjuster should already kind of look that over prior to getting to you. They should have copies, but you want to make sure that you are presenting a physical copy, um, and that you're able to go over that together and to go over your operations production history to illustrate how much loss you're seeing. And so a crop adjuster is going to use, you know, any number of methods to calculate, that yield loss. So some people think it's weird, but you just kind of have to let them do what they're going to do because it all has to do with their adjuster math and system. So that could be them going and like physically counting plants in an area and marking off an area. They could bring a scale and be weighing samples. They will probably automatically take photographs. So just expect that from the get-go. But they might also check adjacent fields within your own farm and your neighbor's farms as well. And they could also use weather data. So to show, there was this much rainfall that contributed to this flooding, or, there hasn't been any rainfall that then has contributed to drought. So there's going to be lots of things. They may look a little silly out there with a little scale in the middle of a field, but you gotta let them do what they're gonna do. Um, some of them say that farmers think they're real weird, but you gotta let the math nerds do their plant math for to make sure you get the most claim you can, most out of your claim. So that is my overview of kind of start to finish crop insurance. Obviously, there are lots of other details in there. Hopefully, this is what will get these ideas started in your head. Um, we can go ahead and do our poll, and then we're going to go into a Q&A. This part won't be recorded, so don't worry that your questions are going to end up on YouTube. And we can answer all of your questions.